Hello and welcome back to another episode of Darwin Investors. Today I'm going to start a series that I'm going to call Let's Play Earnings. And playing earnings is something that I just love to do. It's a way that I like to make extra income in the stock market, and I get to do it 4 times a year. Now, I'm going to start throwing out some numbers. It's going to seem really quite nerdy, but really what I'm doing is I'm doing credit spreads in such a way that I've actually never seen them done before. No, I've never seen another YouTube channel do this. I've never seen anybody else suggest that you do it this way. As a matter of fact, I'm suggesting you don't do this because maybe it's gambling. I think that maybe I'm just gambling, but I do seem to make money with this, I'm not a financial advisor. I'm telling you not to do this, but if you feel like doing it on your own, don't blame me. I didn't do this, but if you feel like doing it, let me show you how it's done. So I'll go ahead and share my screen and give an example of a past one before I go ahead and show you the one that I have coming up in this upcoming week. So in the past, what I've done is, let's say here, Lululemon. Now, this would be one when I was trading, playing earnings with Lulu. See here, it was on the 9th of December, and then the 10th of December I sold. So you can make money really fast. That's part of the lure of this. You don't make a lot of money, but you do it real fast. It's like in a day or 2 days, And so you can see with Lulu here that I bought Lulu for a total of probably 418, 419, 424. These 100 shares, so about 421 a share. I sold it for 416 a share, so it looks like I lost $510. Well, that doesn't tell the whole story. So if you look at the puts I sold and the covered calls that I sold, what had happened was, after it was all said and done, I made $761. Well, how is that? Well, because when Lulu came out, I sold a put, a 400 strike put, for $744.35, and I bought it back for $55. So right there, I made about almost $700. And then on a covered call, I sold one covered call for $450 strike covered calls for $599 and bought it back for 15. So I made about $585 there. And so all told, I made about $1,200 on options and lost $500 on the underlying. And I probably shouldn't have made this trade. I mean, I knew it going in because I didn't like the technical setup. And so I thought maybe I'd lose some money on the underlying, but sometimes you can't help yourself when earnings season is so fun for me. I'll show you something else that happened that same exact week. This is one I really did like the technical setup on it. Same exact day. So this was on the 9th and the 10th. And Restoration Hardware on this week, what did I do this week? On the 6th, I bought it for 552 and I sold it for 631 on the 9th and made 2,700 bucks that same week. So I love earnings weeks. This is one I love the setup on. This would be more of the long gambling, I think, than the Lulu. Of course, I made more, but it's something that it's more gambling than what I'm about to show in this here video, which is kind of like a modified version of this credit spread. And so just to set myself up for earnings season, you got to have some money. And so you can see here, I'm not losing. You see a lot of videos out there that say, hey, I'm losing money. Oh no, the roof is caving in. The stock market, get out, whatever. Well, you can see from the 3rd of January until now, I've made $2,500. So I'm not losing money. No, I do lose money sometimes because I trade in and out and do a lot of options and stuff like that. But by and large, I'm not losing money. I'm actually up about 2,500 bucks this year so far. So a month, it's 5,000 bucks. So that's pretty good for a month. And I do that. Sometimes I lose on options. Most of the time I don't, but there's a loser. But sometimes I lose and sometimes I win. But my big winners this year were Visa here. I won on Visa. I sold Visa because it was up quite a bit from where I bought it. And I think that retail sales are going to come in kind of weak, and that's going to hurt Visa stock. It might not, but this is just my feeling. And besides that, it gives me a lot of money that I can do towards playing this earnings season. And then Wells Fargo went up in a straight line. Okay, if something goes up in a straight line, sell. You can always buy it back for kind of the same price. You might as well lock in some money. But when that thing that goes up in a straight line is Wells Fargo, sell. The financials are something everybody's like piling into right now. Same with energy stocks. You won't catch me dead buying any of those things right now because they're going up in a straight line. And anytime the whole media and everything's into it, just don't do it. Like, what are they down on right now? Tech. So that's where that I like. Oh, everybody hates tech. Well, that's what I'm going to buy. But that's just me. So anyway, so what's my plan this week? So for Let's Play earnings, I love the stock market. I know we're having the NFL playoffs going on right now, but really the stock market, that's my sport. This is where this is like this is my sport. And so the other day, I guess Alabama and Georgia played in a football game, and I used to have Georgia Bulldog season tickets, but I didn't even know they were playing a game. I was like, well, if y'all want to know what's playing, tomorrow morning the Consumer Price Index data is coming out. That's my game. And so I love to play. I love to play the stock market. This is my sport. So 4 times a year you get earnings, and so then what I like to do is I'd like to check the earnings calendar, and then from there I like to select what I believe is the most promising or interesting stock. I don't like one that's going to be too wild. Now Lulu was a wild one, and RH was a wild one, but it's the end of earnings season. You get a little desperate. You want to play a little bit of money. I got a whole bunch of others I could show you, but those are just the two from like a few weeks ago. And so once I select my stock, I check the fundamentals and the technicals, and then I consider the risk reward. Is this the sort of thing I want to get into? How am I feeling? Am I just feeling like totally like gambling, or what do I want to do? And then once I consider the risk and the reward, what I can make versus what I can lose, and I just go ahead and make the play. So the one that I'm going to actually consider this week is, let me see, I'm going to go to earnings calendar. Let me see, earnings whisper. Oh, here goes earnings whisper right here. So what I do is I go over here to the calendar on Earnings Whisper, and I'm not sponsored really by anybody because I got 38 subscribers, but what I do is I'll go over here to Earnings Whisper, and then I'll see what's coming up for earnings this week. And so MLK Day, we're closed, so let's go ahead to the Tuesday, and we'll look here. Goldman Sachs, that might be pretty good, but they're gonna take a beating because there's not as much investing going on this year as last year. So stay away from them. Stay away from Schwab. Banks, stay away from them. Didn't like any of those. Okay, so next day. So Bank of America, again, stay away. Well, this one might be okay, actually. Bank of America might be fine because they have a large retail banking section and they're going to do well from interest rate hikes. But they also have Merrill Lynch, and Merrill Lynch is going to kind of bring them down. United Health might be fine. Procter & Gamble, consumer staple. Let's see. I like to try and make money. I know some people try not to lose money, but I try to make it. So I don't want Procter & Gamble. So none of these excited me. And then so I went here to the 20th, and I went down this American Airlines. Okay, Omicron. Nobody's coming to work. Everything's awful. Okay, no. Let's see. Baker Hughes. Now this is oil rigs. Oil rigs, that's pretty good actually, but I decided not to go that way. What I decided to go with instead was Union Pacific. So Union Pacific is the one that I've selected for this week because I think it's a good company. I think it's nice and stable. I think that it's one that isn't going to let me down too much. So I went ahead and let's go ahead and have a look at Union Pacific. So we look at Union Pacific. And like I said, I have access to this for earnings whispers because I pay the whatever much money it is a month, $20 or so a month to have access to this. And so what I'll do is I can come in here and you can look at stuff like how did they done it before? Let's go fundamentals, earnings cycle, and then we can see that. And now you want to look right here in this area where my little cursor is, because when I hold this here, this is where it was on earnings day. We'll say on that day, it opened at $229.50. It closed at $231.28. So it went up $2.50 on earnings. On this day on earnings, it's opened at $223. It closed at $219. So it went up $4 on earnings. On this day here, what did it do? Got it. It went up, it opened at $218.97. It closed at $217.98 on earnings. So it's down $1. So we're talking about a company that doesn't have much more than like a $3 or $4 fluctuation, if at all, right? So I like that. And so let's go ahead, and now that we look at that, let's look at the areas of support and resistance. Well, here we've got an area of support around 245. It's kind of at a support. You talk about a setup. When you want to do this game, you want to make sure that your setup is like this. It's like diving into earnings. So I'll wait on Tuesday to buy, see if it goes down more. But if it doesn't go, if it doesn't start plunging even more, if it even goes up a little bit, I'm buying. But I'm gonna go ahead and buy right around where it is now, because that's pretty much area support. And the area of resistance is going to be about 255. Let me see here. Area support here is actually right about here, about 240, 243. So it's purely on technicals. But I don't like trading just on technicals. If I did, I would own Bitcoin, which I don't own, which if you own it and Ethereum or whatever and you're making money, more power to you. I just don't know how to value it. That's my problem. So let's see if Union Pacific is a good company. So I'll go over here to research for Schwab and I'll look up Union Pacific and I'll look at them and I'll say, okay, Union Pacific, are you any good? Let's see what Schwab thinks. Okay, Schwab's got you to B, fourth quarter announcement. It's going to be on the Thursday, the 20th. Consensus earnings are 261, low of 273, high of 273, low of 251. Okay, great. This is written right there. Okay, so we're okay there. Let's look and see. Look at this. Price to earnings is 26. Got a PEG ratio of 1.58, meaning that it's got a growth rate of roughly in the 12% range. What is it? 12? Yeah, about 12, maybe 13% range. 13, yeah, about 12 to 13% range of growth. So its forward P is smaller than its current PE. That's good. Pays a nice dividend. Wow, $1.18 a share. Maybe I'll hang on to these guys. That's not bad. 1.92% is the rate. Let's when I go into their statements, I can see that that year over year they stay pretty steady when it comes to their revenues. I can see that they went down in 2020, but who didn't? You know, if you're something that's going to like bring stuff to retailers, but I can see that their operating income is still positive. You know, they're a profitable company, nice company. This is a really nice company. And so then I go over to their SEC filings page. I click on their most current 10Q right here. It brings it up, and it is right over here. And I'm most concerned, let's see if they're growing or what they're doing this year. When I look at them, I say, okay, the 9 months ended September 30th. They're growing. Their net income is up significantly over last year. Their revenues, let's see, operating revenues for 9 months ended, up again. Their net income's way up relative to their revenues, so that's really good. I like to see if they're what's their book value. Let's see here. Their total assets is 62 billion. Their total liabilities is 48, so their book value is greater than 1, so that's good. This is a nice company. Maybe I'll hold on to these guys, but we'll see. So what about their shares outstanding? Let's see, do they buy back their shares? So in 2020, they had 679 million shares, and now they have 658 million shares. So they bought back 21 million shares last year. This is a really nice company. So this is the sort of thing that when you're going to sell puts and you're deciding whether or not it's the kind of company that you want, because you could get stuck with the shares. And so I would say that this is the type of company that you don't mind owning. So let's do this. Let's go over here and we'll go see what we can get for Union Pacific calls and puts. So for Union Pacific, they don't move much on earnings. Remember, we just showed you they're about $1 to $4. It isn't going to be much. So I'm going to go ahead and sell a covered call on them. And the strike price is going to be $247.50. The expiration date is is January 21st, which is this Friday. And I will go ahead, if I sell to open, get $340, $3.40 a share. One contract is 100 shares. So I'll get $340 for this. Now I'll also, this is what I did for Lulu. Remember, I lost $500 in the underlying, but I made $700 because I sold a covered call and I sold a put. Now I think worst case scenario for Union Pacific, honestly, probably 240, 250. But I really don't, I'm not that greedy. Okay, so we're gonna be a little bit conservative here. We'll go 240. And so instead of a call, we'll sell a put. And the put's gonna get us $179. So we'll get 340 for the covered call, 179 for the put. So when we go over here to our spreadsheet to see what our risk reward is and what our potential, gain, loss, or what have you is, Union Pacific is currently at 246.47. I'm going to sell a call for $340. I'm going to sell a put for $179. Let's say Union Pacific goes to $250. Now the put I had the call I had, I sold the call for a $247.50 strike, which means that even if it finishes at 250, I still sell it for 247.50. So when I consider my potential maximum reward, let's say it runs all the way up to 250 and I have to sell my shares, then I'm going to make $101.03 on the shares, underlying shares, even because I still make money. Even if it goes to 250, I still make money. I make $340 for the call. I make $179 for the put. So my total reward is $620. What's my risk? Well, my risk is this. Let's just say that the whole bottom falls out of this thing and it finishes below $240. And I have to buy 100 more shares. Let's say it finishes at 235. Well, I lose 1147 for this, for my actual share price, 1147. Plus I have to buy 100 more shares. And those shares I bought for 240, but they're only $235 a piece. So I lose $500 there. So 1147 plus the 500 is 1647. But if I feel like it, I can turn around and sell covered calls at the money on those 200 shares and get myself roughly another $680 back. So I would calculate my risk would be about 967. Now I understand people are watching this going, well, you could probably get less money than this for this covered call because the volatility is so high before earnings, meaning that this call is going to fetch a higher premium now than it will say on Friday. And that is correct. But I could sell it in the money. And I could sell it, further in the money, deeper in the money, and I could get this money back if I wanted to, but that would lose some share price. But let's just say, for sake of argument, it's about $1,000. So my risk is roughly $1,000 and my reward is 620. Do I think it'll go down to 235? No. Do I even think it'll go down to 240? No. But what I expect is I'm roughly going to get about $550 out of this deal here. And so that's what I plan on doing for earnings. That's what I plan on doing for earnings this week. I'm going to try and I'm going to buy 100 shares of Union Pacific, which I may or may not sell back. I don't know. I've looked at the stock and just while recording this video, I really like it. But my plan is to actually buy the stock, sell a covered call, sell a put on it, and then sell the shares on what's called the 1% trailing stop. That's the way I usually get out of these things. I usually, after earnings, do a 1% trailing stop, get out of the stock, get my money back, and then call it a day. If you got anything out of this video, please go ahead and hit the subscribe button, give me a like, maybe hit that little notification bell. And until then, I'll let you know how this comes out, and then we'll play earnings next week. Have a good day.